Hello everyone, and a very warm welcome to today's cryptocurrencies update for Wednesday, February the 8th, 2023. I can start off with that I don't really have too much news to tell you. So if you don't want to listen to this, you can zoom out. We can just go over a little bit the same old regurgitate and beat a dead horse with it. Please read the slides if necessary, and let's just go to the charts. There's just some things I want to point out that are always nice as a refresher. Here is Cardano, and as you can see, Cardano is struggling with the 200-day moving average. I just want to point it out because you can see it's been up below it, and then up, up, below it, up, and now it's trying to hold it as support. Now that looks just like whipsaw country, but it's a very simple long versus short or buy versus sell indicator for the long term. You might think, well, that's a losing trade. That's a losing trade. That might turn into a losing trade. That's 3 losing trades. This is worthless. All right, well, let's have a look, and we're going to zoom out a little bit then. Okay, what happened if you would buy when it crosses above the 200-day and you just don't do anything until it's back above it? So you would have bought here in July of 2021, and you would have sold here in November of 2021, and you would have gone from about $1.20 to about, I would say, $1.80. So that's still a 30% gain without any headache. It needs to be a daily close, not these wicks. From there, you would then have prevented this whole downturn we've had. You would not have sit through any of it, and now you can see we're starting to trade again with very tiny losses, right? So this was a 30% gain. Just that one was a 30% gain. So then you look at how tiny your loss was here, right? Tiny, tiny. And we can go back further in time, of course, and you would do the same again. Go back further in time. Here we go. So you would go long here, and you would hold it and hold it and hold it, and then you would buy it here at about 5 cents. You would sell it here at about, I would say probably 8 cents. Again, that's a nice 60% gain, no worries, okay? And you will do the same here and here and over again. I just wanted to show you so what it means that if we are above the 200-day, chances of good things happening increase. If we are below the 200-day, chances of bad things happening increase. So currently, Cardano is struggling with the 200-day moving average. It hasn't been there, as I showed you, for a very long time. So this is a positive development since November last year. Okay, so this is now 14 months. So this is a significant development, and we'll see eventually Cardano move above it. Okay, that I think is going to happen. Cardano is still not at zero. It's still used, it's still operational, it's still doing what it's supposed to do. No problems. This is not a Luna, not yet. Can always turn into a Luna. That we don't know, but it doesn't look like it. Not at all. So we're good. So I just wanted to point you out the importance of the 200-day moving average. And again, compare that setup we have now. We're above the cloud, above the 20 to 50 versus where we were all of last year. Okay, so that is the trend is your friend. It helps identify if you should be wearing a bullish cap or a bearish cap. And right now, this is a cap that is almost full on your head. It's like 80%. All right. Why? Because we're not really in a bull run where we are above all the moving averages, and the moving averages are all bullishly aligned, as we saw here. This is a bull run, right? This is a bull run, and that we're not there. We're kind of here in the early starting gates, probably like November 2020. So patience. Same here for Avalanche. Just want to point you out, Avalanche is above the 200-day. It's now below the 10, above the 20, 50, and the cloud. So again, this is a different setup than we had all the way from September into December. So this is a more bullish setup, but we do look a little bit tired, where it looks like we're forming a top, and a retest of the 200-day moving average might very well be in the cards. I'm just not going to go through all of these detailed wave counts. Here we have Binance Coin. Looks like we might be working out a ending diagonal wave 5. That is very possible. Again, we know the levels to watch. right? We need to break, in this case, back above, back below about 310. That would be the first warning for the bulls. Okay. And then, of course, the second warning for the bulls is if we break below here. We've broken above several of these bear warning levels. Okay. How we're looking on Bitcoin. Bitcoin looked good yesterday. And if we start to move lower, then the preferred wave count is that we had a wave A lower, a wave B up into today's high, and then we're going to see a wave C lower into this orange target zone, which is anywhere between 22,000 and 21,000, which matches quite well with the normal standard gray target zone for this gray wave 4, between 22.5 and about 21.5. So we have nice confluence on an A, B, C. So either C is A or C is 161.8 times A, matches quite nice with the typical retrace for a fourth wave between 23.6 and 38.2%. And as you can see, 21,500 was previously resistance, that can now be support. And the same here with 22,500, that was support all the way here in January. So this looks good for this wave count, and then from there we should see 5, 4, and a 5. We need to break much lower, I would say below 19,500, to start to suggest we have already topped. Again, this was the ideal technical indicator setup I was looking for, the MACD, top out, roll over, and then again make a lower high. And so far, as you can see, this was put in the chart weeks ago. It's working out quite nicely, or days ago, whatever it is, quite nicely. So I'm not concerned whatsoever. All we might see is this preferred 4-5-4-5 setup. Ethereum, well, this one is continuously running into stiff resistance. Again, right here at 1670, 1680, whatever it is, super stiff resistance. We need to get above it. If we get above it, then we can target the 1800s. If we don't, I don't really know how exactly to count this flubber wave, I would call it, that we've had now for a month, or this price action, but then we might have already wave 3 here in place. Similarly for Bitcoin there, and we might then be in a wave 4, and then eventually we still get our wave 5, okay? So this is then a kind of a little bit of a failed attempt, not as high as I would like it to be, but it is what it is. I still see no reason for concern. We haven't even broken below 1500 yet, okay? So intermediate to long term still looks good. Look at Bitcoin, it has now a golden cross, the 200 days moving up and the 50 days above it. Ethereum is getting very close. So this is still a bullish looking chart. Yes, we have the negative divergences and all that stuff going on, but it is what it is. Now we need to break above that darn 1670 level. What a resistance. Resistance here, resistance, 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 resistance. 1, 2, 3, 4, 5, 6, 7 days pretty much. It's been trying. Remember, at some point we get seller exhaustion. Okay, we can't keep on selling at this level. At some point we've sold out. Then you know what's going to happen. We're going to bust higher. How we're doing on Link, same here as for Cardano. It is gyrating around this 200-day moving average. It needs to break above 750. If it gets above 750, we can start looking for the 8s and the 9s. So we're in a okay uptrend, but it's nothing to write home about just yet. How we're doing on Matic. Matic finally reached this 135 level I was looking for, right? 130 plus or minus 5 cents for this potential 5 of 5 of 1. Definitely more negative divergence developing the higher we go. So this is not a bad wave count. It's been tracking along quite nicely, and it looks like we're forming some sort of ending diagonal, as you can see, a ending diagonal wave 5. So we've reached the ideal upside target, and anybody who's long, you know, it might not be a bad idea to ratchet up stops, take profits, that kind of stuff, okay? So if we are then going to top out a little bit, let's say here at 135-ish, there, right there, then we should look for this wave 2 retrace back here into the dollar to about 90 cents. And then we should see wave 3. This is a bullish chart. Look at where we are with price. We're above the 50-day, which is above the rising trend. This is a 100% bullish chart. Absolutely. So I prefer the 100% bullish scenario. Alrighty. Solana is definitely struggling here. It's below the 200-day. It failed to get above it. It's below the 10 and below the 20. So this chart is now, I would say, 80% bearish, something like that. We are above the 50 in the cloud, so that's good. But again, we need to break above 26 to target 28. This looks a little tired, and we might be rolling out. That would be then a 1-2, 1-2, and then this would be a 1-2, 3-4, 3-4, 3-4, potentially 5 for a last wave, or we are 1-2, 1-2, 3-4, 3-4, 5. So at some point we can't really exactly elucidate where we are because of so many waves, but it starts to look a little bit tired, so the moving averages can help us. That's really all I wanted to cover today, just quick and short, so you have a good idea of where we are in the bigger picture. So with that, please trade safe, take care, and catch you all next week.